Let's kick off with our banner story. Inflation likely slowed to its lowest level in 7 months and settled within the Banco Central's range in July. A Businessworld poll of 15 analysts yielded a median estimate of 4%, and if realized, this would become the slowest inflation since the 3.5% figure recorded in December of 2020. Now, the CPI for last month would also be slightly lower or slower than the June reading of 4.1%. This would also mark the first month since December that inflation settled within the 2 to 4% target set by the central bank. Analysts attributed the slight easing to improvements in meat supply as a result of lower import on pork tariffs and higher import volumes. Analysts also said the impact of continued rise in global oil prices may have been offset by better meat supply. Moody's Analytics senior economist Katrina L. said another factor for easing inflation is the relatively slower rise in transport prices. L said the easing inflation and rising Delta variant cases strengthened the case for the BSP to retain its loose policy. She said the sustained accommodative monetary policy environment is critical to support the economy amid mobility curbs and a rise in COVID-19 infections. Bangko Sentral Governor Ben Diokno has earlier said that the central bank will keep an supportive monetary policy on the back of a slower than expected economic recovery. Now, the DILG has ordered the reactivation of border controls at the peripheral boundaries of Metro Manila and nearby provinces. That is in preparation for the 2-week ECQ, which will start on Friday. That's August 6th. Only APORs, or authorized persons outside residence, will be allowed to enter and exit NCR. But for Marikina Representative Stella Kimbo, it's not just an NCR travel bubble that's important for the economy to survive the lockdown. The lawmaker is proposing the creation of business bubbles where workplaces that are willing to test or vaccinate employees should be allowed to operate. Kimbo said fully vaccinated people should be allowed to report to work and go out to buy food so that businesses don't need to close down operations for 2 weeks. Otherwise, Kimbo said the implementation of another ECQ in the metro could lead to losses of about 18 billion pesos per day based on national income data. She added that there is no reason to execute the same exact lockdown measures as before, now that widespread testing and vaccination have been added to the equation. Meanwhile, supermarket owners are asking the public not to do panic buying at this time, as this could lead to further price increases of some products. Supermarkets Association President Stephen Kua added that supermarkets won't be able to restock their supplies before the ECQ if certain products run out. The Trade Department agrees, saying it may take a while to deliver goods after supermarkets run out of stock, but the agency says there will be sufficient supply since manufacturers will not stop producing. Welcome to Ghost Month, everyone, which comes with a spooky lockdown. This is a combo which is not a lot of good news for traders, and we have more news to digest today. Take a look at my terminal here. You will see there our IHS Market July Manufacturing PMI, at least still in expansionary mode. That's at 50.4 versus 50.8 in June. It did fall. It is the lowest reading we've seen since May 2021, but the good news is it's the second consecutive month that we've seen of expansion. Let's take a look at how our index is opening this morning. You can see us recovering a touch. It's up by 0.7% after a hefty slide last week. Stocks crashing down the most in 6 months following, of course, the government's announcement of that 2-week ECQ to start on August 6th. That was lower for the fourth straight week. We were down 3.8% week on week. And from a year-to-date basis, I'm just going to pull that out for you. We are already down 12.2%. Now, let's take a look at the sectors here and which ones are pulling the weight. It seems that everyone is in recovery mode after that huge sell-off, led by industrials up by 1.15%, holding firms as well, financials, and then services and properties. Let's take a look at the big movers of the day. To see whether the ones that were heavily sold off, we had the mall operators, the restaurants like Jollibee heavily sold off on Friday. And there seems to be a little bit of a reversal going on, but still not the case for the likes of Bloomberry, and the likes of the property players, which have, of course, mall and retail operations that will be shutting down during the ECQ. But you can see JG Summit up by 3%. You've also got URC, which had released its earnings. We'll be discussing that later on with our guest, Tina Ulang. That's up by 2.8% this morning. Now, one thing to be focusing on are still more earnings, and you've got the financial space also in focus. This, of course, after June, bank net loans did fall 2% year on year, according to the Banco Central, but that is still better than the 4% decline in bank net loans that we saw in the month of May. So loans for consumption and household consumption fell by 8.6%. It's still better than the 9.2% drop previously. Same with productive activities, falling 0.6% compared to close to 3% of a drop in the month prior. You've got BDO releasing their earnings, and take a look at that, already up by 1.3%, 6 minutes into trade. They had said that their first half net income is at 21.4 billion pesos. That's on the back of net interest income at 64.4 billion pesos. They mentioned that the loans remained flat. That was at around 2.3 trillion pesos, but it was the non-interest income that was rising close to 30 billion pesos. Their fee-based income increased 20%. Another interesting thing on BDO is saying that their return on average common equity did improve. That's at 10.75% now from, get this, 2.3% a year ago. And finally, just quick check on the peso. This has been downtrodden, but we do see some strengthening. We're back at 49 levels here, 49.97 as of July 30, but we're seeing that weakening a touch as it moves. And of course, July was a very brutal month for the peso, and some analysts, particularly Nikki Mapa, is saying that we might be seeing it touch 51 levels to the greenback. Now, here to chat with us about whether there are any bargains to be had during this period, we have with us Tina Ulang of First Metro Investments. Good morning, Miss Tina, and welcome to
Hi.
Businessworld.
Hi, good morning. Morning, Danny.
Ma'am Tina, so we are seeing, let's say, a positive reaction, even if it's the first day of August, supposedly the ghost month here, and of course, anticipating even more restrictions in the coming weeks. Why is this? Has the lockdown effect already been priced in as of Friday? Does this mean that the support levels are quite strong at 6,300?
Mm-mm. Well, this lockdown is some sort of a shock to the market. No, although it's been like anticipated, it's coming. But this is again a repeat of the setbacks that we had last year. It's going to be a heightened restriction, and then last April. So it seems that the economy is unable to build the momentum because we are in a cycle of like lockdown, and then stop go because of the Delta variant, and the vaccination is no longer in focus. It's really the spreadability of this variant, and how are we going to cope with this. Are we going to live with just stop go with respect to the economy? In that context, we're going to lose like what government estimated to be like 1 billion, $2 billion for the 2 weeks of which is about 100 billion pesos, and that puts again in highlight our debt to GDP, which is now the concern of the rating agencies, because the growth is at stake. The growth outlook seems to be uh, challenged by this stop go cycle of the economy. But I'm confident that the policy support will be there. We have room for policy stimulus from the BS, from the monetary authorities, and there could be some ayudas also to cushion the spending, the expenditure side of the GDP. So some measures are going to be worked out so that the economy stays on the growth track. But this market is not for the faint-hearted increasingly, because it's not all about fundamentals. There are now risks that are becoming very visible because of the stop go cycle that we're in, and it's really the growth impact of that of the challenges that we face.
Ma'am, do you agree with some of people in the private sector saying that this might actually be the best time to lock down because it's August nga, it's ghost month. A lot of the operations might be stopped anyway, and of course in anticipation of staying open during the fourth quarter, particularly in December when all the consumption is there. Is the market at least happy about that preemptive fact?
Yeah, oo. I think we have learned, government has learned its lessons. We have had a good uh, uh, sort of a history, our experience. We have seen the worst happen when the cases shot up to like more than 10,000 last March. And now we have the hindsight to deal with this one, and government is very proactive, so that in the fourth quarter, third quarter, maybe September, we can have a, a retracement of where we were already, because this market, if you're going to be the if you really are interested in equities, you're going to notice the pattern, because when we had the lockdown last year, 4,600, that was the level of the PSEG, and then we reached 7,100 at the end of the year, and so that's a 50% increase, so that is an opportunity to trade. And then for this year, the low was like 6,100, and then we reached 7,000 in just a matter of weeks. And that again is a 14% upside. So this market is not totally dead. There are opportunities if you are very keen on the patterns and the trade opportunities, the ups and down. If you're able to see that this ghost month is not gonna be bad at all. This is an opportunity to buy again and see where this leads us towards September. We can have an upside from here on to September, because this really is a weak period, historically weak period for the market, and then a recovery usually happens September. And then in September, uh, Christmas, usually it's an upside for Christmas.
Okay. Ma'am, when to enter? So now we're at 6,300. Some analysts are saying we might be testing the 6,000 levels, but it doesn't seem that we're heading there, at least not for today. And you mentioned nga, in the last lockdown, at least in the major lockdown in 2020, the market surged 7% after the reopening of the economy. At what stage should we be entering, and what can you call a real bargain?
It's really hard to call the bottom, no, to see the bottom and to catch the bottom of the market. No one is able to do that. So all we need to do is really just to accumulate and accumulate and accumulate, and look at very discounted uh, uh, issues and companies that are cheap, not for a reason, but are cheap only because of the broad market condition, and those that have very good prospects in terms of their profit outlook, then those would be the ones that we should pick.
Which ones are you most excited about, ma'am, in terms of the ones that are heavily sold off just because of this situation, but as you mentioned, have long-term fundamentals and should be accumulated? Which sectors in particular? Because are we still going to be looking at the so-called lockdown stocks, the telcos, the supermarket stocks, or as you mentioned, baka cyclicals na is the time to be picking up right now?
Mhm, mhm. Of course, there will be again an obsession with the essentials, because we are now faced with the lockdown. No, so if we are going to be in this cycle of stop go, then there is going to be always some interest in the essential. But the digital economy is there, remote working is happening, online education. So the telcos will really be the favorites, and will be picked up when it is low in terms of the valuation. And then also the banks have shown very resilient results. BDO has come out with its result, and then BPI. And although lending is still not there in terms of the appetite, the credit standards are very tight. The banks are really strong in terms of their financials, the balance sheets, the capitalization. So this is a sector that has really weather the bad and the good times, very strong sector, and will capitalize on the recovery if that happens. So I like the banks, the big
Mm-hmm.
ones, those with the big franchises, and those issues that are in the forefront of the internet economy, such as the telcos.
Okay.
The those that are going to be reopening, it may take a long time for the recreational, the tourism, and the hotel and aviation to really recover. But there are opportunities in terms of debt issuance on their part. The yields are higher. Of course, these are for investors that are willing to take on the risk, like Cebu's preferred, convertible preferred,
Okay.
like
Ma'am,
and the REITs of the property, the REITs of
mhm.
the REIT issues of the property.
Okay. Ma'am, you mentioned supermarket and staple goods. We do have URC, which is jumping already 4 pesos and 50 centavos. It's up by 3 and 6 tenths of a percent. They did report, second quarter net income, which was up by 43% year on year. First half results, net income up 46% as well. Tell us, are you still excited about URC? What can you tell us about the earnings in the second quarter? And now with the lockdowns, how would that affect them?
Mm-mm. URC is doing measures designed to beef up the balance sheet, to improve the liquidity in the balance sheet, and to consolidate the business. They are very keen on which parts of the business are really strong, which parts are not are not up to expectation, and they are quick to and nimble enough to really do some changes, overhaul the structure and the subsidiaries and all those that they think will not contribute in a big way immediately to the core business. They're able to make the company very efficient and very profitable by getting rid of some business segments that are not really meeting expectations. So I think that's very proactive in terms of uh, fortifying the balance sheet onwards, and in terms of also uh, configuring the assets to meet the liability management, the requirement for liability management. I think that is what's good
Okay.
about URC.
It's really about the cost efficiencies. And finally, ma'am, mining sector, it's been touted by economic managers as crucial for the recovery. Tell us, they did quite well. At least, Felix second quarter income up 86%. You've got Apex Mining as well, up 9.1% in the second quarter. But this, they've also said that this is because of the commodity prices going surging up. Tell us, is this something sustainable in terms of the commodity prices, and will you be expecting this for the rest of the year?
Mm-mm. Several factors are working in favor of the mining sector. Government has made the regulatory environment climate more friendly to them by extending this, by the continuation of the approvals for the MPSA application. So there's resumption on that. That was terminated before, but now it's in place, and I think that has improved the sentiment towards the mining sector. And then secondly, you have very good prices in the world market for commodities, but the challenge really is the weather and the sufficiency of reserves underneath. Because in the case of gold, there's been this lowering of the gold grade, and so the recovery is not very high, and it takes a lot of cost and technology and manpower to really get into the higher grade, and maybe more hectares for development exploration, to get more gold and to get more high grade gold from the mine. So it's a question of mine life, shipping cost, and then very good prices for commodity. So this is, I think, is something that's going to be ongoing. This year, next year is still good for the mining sector.
Okay, but as you mentioned, quite a lot of things still, quite a long-term play when it comes to mining to really be able to reap those benefits. Thank you so much for all your insights. That was, of course, Tina Ulang of First Metro Investments.
Thank you. Bye bye.
Checking in on the other headlines, we're keeping our eyes on Budget Secretary Wendell Avisado is on a medical leave starting today until August 13, 2021. This comes after Avisado's recent bout with COVID-19, where he was hospitalized for 8 days and quarantined for over a month. He was advised by his doctors to undergo a series of tests since he went through a quadruple open heart bypass surgery 14 years ago. Undersecretary Tina Rose Marie Kanda will serve as officer in charge during this period. Bayan Muna Party List Representative Carlos Zarate lamented the timing of Avisado's leave considering that Metro Manila is entering another hard lockdown. Zarate explained that Avisado is yet to address the issue of finding funds for Ayuda during ECQ as well as the budget proposal for 2022. Now, the NGCP is looking at converting 35 non firm contracts to firm based arrangements for the provision of ancillary services to the power grid. Now, currently, the grid operator is procuring ancillary services from a mix of firm and non firm contracts, which the DOE previously flagged. The Energy Department previously explained that non firm contracts for reserves compromise the reliability of the grid since providers under these arrangements get to decide when to provide reserve power. ERC Chairperson Agnes de Banadera said the NGCP is now renegotiating its non firm as contracts to firm contracts and will provide weekly updates on any progress. And that's a first look into the business day. Today is Monday, August 2nd, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.